All right, good morning, everyone. Welcome to our morning market update for Tuesday, August 29th of 2017. This is George Papsov, Trade Academy here. I welcome you with my patented chair spin today. It's a patented move, um, punishable by law if you bite it, if you copy it. I'm just kidding. We have a lot to talk about today, as usual. In Asia, Japan's down 0.5% or half a percentage point. Hong Kong's down 0.4%, China's up 0.1%, and India is down a whole 1.1%. All right, in Europe here at midday, London is down 1.5%, Paris is down 1.6%, Frankfurt, which is Germany, is down another 2%, and it's a pretty big down day on the European market in the European session. Started off down in Asia slightly, and then that sell pressure intensified as we moved into the European trade. Okay, and that's very important because this morning, S&P 500 futures are also down 0.8%, almost a whole percentage point. Dow Jones is down 0.6%, NASDAQ is down 1% as well. They have since recovered some of those losses, so we've seen a little bit of a rally, but we're still trading towards the lower part of that gap down on the 6 p.m. open. So what happened? I'll tell you that in a moment. Crude oil is down to 46.5, and gold is up to $1,331. I've been yapping about this gold trade forever. I hope you got a chance to get on board. It's too late to buy it now. I'm starting to think about cashing out and taking some profit. Got almost about $5,300 on that trade on one single lot. I just bought one contract and I held it. And I'll do that sometimes when there's strong seasonality, which you should read about on our blog. When there's strong seasonality and strong indications that the trend will continue, why the heck not? It's worth a shot. All right, today's economic calendar, we got consumer confidence at 10 a.m., and that's about it. That's the big results, or that's the big news. 1 p.m., we have results of a $28 billion 7-year auction. Okay, yesterday, what spooked the market is there were 2 missiles that were launched. One was in the direction of Guam from North Korea, and that crashed into the sea, and one went directly over Japan that also crashed into the sea. Japan actually prompted an emergency response and told the residents to stay at home and be safe. And they cautioned against doing that. They said they violated UN sanctions. They were really worried and upset, and that's what Japan's message on that was. North Korea is they're not backing down. They're just continue to fire missiles, and at one point, they're gonna get themselves in a situation where they've got to do something. All right, and I think we're really quickly marching towards a potential war here, and a potential conflict. And at this point, I can't say that it's not going to happen or it's going to happen. I'm just telling you that there's the makings of a disaster here. Why did North Korea feel that they had to fire a rocket? The United States and South Korea had joint military tests. We talked about that in our video last week, which is why you should watch these morning market updates. And North Korea did not like that. They said, if you guys are going to do demonstrations of military and do joint tests, we're going to have to take matters in our own hands. So they launched those rockets. This comes after Donald Trump just said a few days ago, to about a week ago, he said, listen, I like that North Korea is starting to respect us. And in the face of that, North Korea fires 2 rockets. Actually, they fired 3 on the weekend and 2 more yesterday, and they're not stopping. They're actually increasing their intensity. So something's got to be done here. This response or this action has caused the response in the market to sell off the S&P 500. You got to understand that that's a risky situation to get into with no actual known outcomes. Therefore, there's fear, and the traders don't know what to do. What do you do when you have a run from 2009 to 2017, an 8-year bullish market? What do you do? You're stuffed full of long positions. You're going to take some profit, and you're not the only jerk trying to take profit. Everybody else is with you. So now you got a whole bunch of sellers. And when you got a whole bunch of sellers, what happens? Those sellers don't want to buy. There's no buyers. And when the bids start to cancel, liquidity evaporates and the market just sinks lower. And that's what I've been telling you guys is a lot of you that are trading, that are new traders in the market, do not remember what a real down market is like. And that's by design. It's not because it's happening by coincidence. You don't remember it because they want people to be fully invested that don't remember it. So when the sharp drop happens, who loses? Retail. Retail traders always end up holding the bag. The last 2 weeks, we've seen institutional outflows from equity into gold, all right, into the Japanese yen, into bonds. Professional money is running away from equities and going into safe haven assets. Yet here's CNBC and all these news outlets telling you to buy the market. It's a dip. Buy this dip. Go ahead. You buy this dip. I'm telling you, it's different this time, and it starts to look ugly. I've blown out all my equity positions from my account as of yesterday. That note's going to go out to the Options Pro subscribers today. I've sold all the equities. I'm out. I've cashed out on equity markets. I'm all in cash, and I'm invested in gold, and this thing's going to get ugly. All right? You heard it here first. Gold, yen, Swiss franc are all getting a bid. They rally higher. U.S. stock indexes, global futures getting hammered on this news. Shinzo Abe is saying it's an unprecedented grave threat. He is the one second. He was calling for an emergency meeting on the UN Security Council. I don't want to miss this point. It's an important point. All right. He's calling for an emergency meeting. So that means today there's some volatility that could come out. Some more reactions could come out today. Be careful how you trade. Have a news wire. If you're not following the news today, you could really get kicked in the chops and not even know why. All right. Abe is, back to the other point, he's the leader of Japan. He's the prime minister there. All right. Statement by President Donald J. Trump on North Korea. Here's what he said. The world has received North Korea's latest message loud and clear. This regime has signaled contempt for its neighbors, for all members of the United Nations, and for minimum standards of acceptable international behavior. Threatening and destabilizing actions only increase the North Korean regime's isolation in the region and among all nations of the world. All options are on the table. That's how he ended it. Okay. At some point, Donnie Trump's going to have to stop talking and do something about it, because South Korea has staged some military action. They're doing bomb drops, and they've staged that close to the border, close to North Korea, as a demonstration. Japan is starting to talk about taking some measures as well. And Donald Trump's just saying all options are on the table. I got a feeling we're in the final moments here of something that could really break loose. Be very careful. I'm telling you, this is different. This is not like one of those dips that you buy and say, hooray, I got a nice shopping spree. I bought it on discount. Woohoo. The market might be on a discount right now, but there's a reason for it. Values dropping. A lot of institutional money's pouring out of equities and going into safe haven assets. Do you want to be the one that's buying it from them? That's the question I want to ask you. So as of this morning, I'm converting to selling rallies and only day trade buying dips, and only for long, short-term buy stop runs, nothing else. I'm looking to the downside. I think we're going to break it open potentially today, later on this week. And if this thing escalates more, we could break it open even quicker and much further down. I'm talking about a decent drop here. This could be the start of something bigger as we move into seasonal weakness. Why is this such a perfect storm? Well, because September and October are terrible months for equities. Volatility spikes, gold increases as well. That's why I'm long gold on a seasonality trade, and I found a good level to do it. All right, so look out. The sectors or the assets are going to start to rotate in a risk-off type of way. That means the money is going to start chasing safe havens. That could start today, as early as today. It's already started, is the news I want to give you as of about 2 weeks ago. And we talked about that in Market Analysis Live with our subscribers. I showed you the data. Institutional money is pouring out of equity and into safe haven assets. Be informed, all right? That's going to be the beat of today. Watch for that. In addition, Tropical Storm Harvey is coming back around, all right? I don't know what's going on, but it's coming back. There's going to be more rainfall. I'm looking here, 10 to 20 inches of rain in the coming days. Insured losses could be as much as $10 to $30 billion, according to JP Morgan. I think that the news of devastation has already been priced into the market. I don't think the full economical loss has been priced into the market. I don't think these insurers even know right now how much money they're going to lose and how much they have to pay out. Okay, so you look at insurance companies that operate in the region, and you could buy puts on them, because in the coming days, there's going to be a twofold trade. Okay, one, we're going to find out the total damage, and it's probably going to be a lot more than we think. And number two, equity markets are going to start to get bearish. That's a twofold trade that's going to push those prices lower. So I think put opportunities there are just, and it could be a good trade idea. Up to you. It's your money, not mine. All right. It's among the top 10 costliest hurricanes to hit the U.S. Katrina and Sandy were digested and discounted by the markets and national economy relatively quickly. So I wanted to make that point. However, they were different. There weren't any North Korean or Korean Peninsula tensions. There weren't any trade wars with China. There wasn't Britain's Brexit that's going terrible right now, and all their plans are getting rejected. Okay, there aren't any single one of those geopolitical risks, let alone the three together. So it's getting interesting here. But U.S. fuel prices continue to rise. All right, Gulf Coast refiners are cutting their output, and that's leaving more than 13% of the country's refining capacity offline. So that's what's really causing gasoline to skyrocket. Less refining, which is, yes, less supply, with equal or stable demand economically leads to an increase in asset prices. So that's why gasoline continues to raise higher. That's RBOB, RB on the CQG platform. It's actually RBE and on Market Delta. And it's up another 1.7% today. So gasoline continues to rocket higher while crude oil gets hit. It gets sold off down to 46.5 a barrel. All right. Goldman Sachs says that Hurricane Harvey will reduce the Q3 GDP. So that's an interesting statistic because GDP is a measure of growth in the economy. So one hurricane was enough to take it offline. There's now a fight in Congress over funding to Texas for Hurricane Harvey. So there's that to worry about as well. All right, there's a lot of things on the go. Each one of them could cause an impact in the market. The totality of them together, that becomes worrisome and dangerous. I've always said it. This market is a room full of dynamite. All it needs is somebody to walk in with a lighter and to do something stupid. And we're getting close to that situation. All right, we're getting very close. Be careful, trade careful. Here's my advice. All right, take it with a grain of salt. You're listening to a guy on YouTube. So, manage your own money according to your own situation. Advice number one, never listen to a guy on YouTube and take his advice and put it into your own portfolio. Make sure it makes sense for you. Number two, and my other advice here for you is if you're long, sell some of that darn equity. Take some profit. Nobody's ever gone broke by taking profit in the market. If you've been hanging on to from 2009, 2011, 2013, 2014 to now, you've got some good profits. Do what the smart money and the institutional funds are doing and lock some profit. Sell some of that. Crystallize the gains, okay? Because you can't pay your bills with an unrealized gain. You need to sell and take the cash in order to use it for anything else in your life. Therefore, take some profit off the table. That's the first and foremost thing I would do in this situation. Institutions are rushing to do that. They've been doing it for the last 2 weeks. Are you? Okay, because you got to trade with the smart money here. The dumb money is buying this dip. It's going back to new highs. Buy, buy, buy. What's changed fundamentally in the market? Nothing's changed fundamentally in the market. There are no fundamentals in the stupid market, and you have to know that. Okay, there's no fundamentals. There's no downside trade until now, and I think this is going to break wide open. For those of you that remember a couple months ago, just go onto YouTube and type in British pound flash crash. Look at how bids just evaporated overnight. Trading room, I'm going to show it to you because you need to know what can happen in a matter of seconds. Okay, I'm not trying to scare the crap out of anyone. I'm just being honest and real here. Take it from a guy who's been trading for 13 plus years at this point. I've seen everything. Well, not everything, but just about. I haven't lived forever, so I can't tell you I've seen everything. Nor would I want to live forever. Hope that helps you guys. Lock some profit by selling some stock and taking money off the table. All right, if you want to take it a step further, buy some put side protection or downsides called a protective put. We teach that in our options course. You can do some debit spreads to get some more bias to the downside. All right, you can sell some call side liquidity on increasing volatility. You can do a number of things. You just got to choose what to do. All right. Take care. Have a great day. I'll see you guys tomorrow at 9 a.m. Let's see how this thing shakes out. Trading room. Let's trade together. If you want to join the trading room, tradeproacademy.com/free trading room pass. Join us for a 2-day trial. Today's your pretty much last day to get the full 2 days. Actually, tomorrow will be because you get 2 mornings for the month of August, and that's it. I'm not extending this 2-day pass thing anymore. It's just August, and we're done. Over and out after that. Take care. All the best, guys. See you on tomorrow. See you tomorrow at 9 a.m. All right, trading room, give me a second. Let's get this thing started. And we get some blockbuster trade opportunities. I'm trying to get into the short here. I'm offering 43.5 to 43.25. I'll show you why that level is important. Let me end YouTube because it's still kind of going. I want to show you that chart as well.